Marcel Haag is the Director for Horizontal Policies in DG FISMA. So we're moving to the session of the programme now, which is more the public sector, the Brussels bubble. Marcel, as I said, we heard a little bit there about blockchain and AI. We know that DG FISMA is doing work on AI and financial services. You have an expression of interest recently on tokenization as well. So we're very much looking forward to hearing, where we are today, where we've come from, and a little bit about what the future might bring. Marcel, over to you. Thank you.
Yeah, thank you very much. And good morning, ladies and gentlemen. I think I will have to move you from frontier technology to what, if we get it right, will be for frontier regulation. Now, early on in the mandate of the outgoing Commission, the outgoing Commission adopted a communication that has almost the same title as today's event. It was called "Shaping Europe's Digital Future." So maybe this event is a good occasion to take stock, look back at what's been achieved since, and then also take a look into the future. At the time, the communication set out three key objectives, which were for the European Union, and these were the deployment of digital technologies that make a real difference to people's daily lives, the use of digital technologies by companies of all sizes to boost their productivity and competitiveness, and to ensure a trustworthy digital environment in the EU. Each of these objectives are obviously also relevant for the area of finance. The protection against cyber threats has to be ensured, and artificial intelligence applications must respect people's rights to earn their trust. Innovative startups need to be able to access finance to grow, and EU rules applicable to business should be fit for the digital economy. And access to high-quality data should be promoted with adequate safeguards for personal or otherwise sensitive data, for example, by giving people more control over their data. Back in 2019, President von der Leyen asked Commissioner-designate Dombrovskis to put forward a strategy in support of new digital technologies in our financial system. She also asked him to ensure a common approach with member states on cryptocurrencies to make the most out of the opportunities they create and address the new risks they may pose. This was the background against which the Digital Finance Strategy was born in 2020 to embrace innovation while preserving financial stability and market integrity, as well as consumer and investor protection. At the time, we set out 4 strategic priorities of how Europe can support digital transformation of finance while addressing the associated challenges and risk. Our first priority was to reduce fragmentation in the digital single market for financial services. This should help consumers access cross-border services and help EU financial firms to scale up their digital operations across the single market. We have, in particular, worked with the European supervisory authorities to strengthen the European Forum for Innovation Facilitators as a platform for financial supervisors to share their experiences and technical expertise that was gained as part of regulatory sandboxes and innovation hubs. And here our objective was to form common views on the regulatory treatment of innovative products and business models. We also established the EU Digital Finance Platform to foster cooperation between private and public stakeholders. Our second priority was to ensure that the regulatory framework facilitates digital innovation. Here we adopted 2 legislative proposals related to crypto assets and the use of distributed ledger technology. The Markets in Crypto Assets Regulation, MiCA, is intended to serve as a comprehensive and proportionate regulatory framework with respect to crypto assets that are not financial instruments. MiCA rules on stablecoin issuers already apply since the summer, and the rest of MiCA will apply by the end of this year, so in a couple of weeks time. The crypto asset ecosystem is in the process of being brought within the EU regulatory framework and supervisory fold. Meanwhile, we're also finalizing the adoption of draft technical standards submitted by ESMA and EBA. The regulation on the DLT pilot put Europe at the forefront of innovation, enabling market participants to safely experiment with DLT to issue, trade, and settle securities. We also amended MiFID to make it explicit that securities can be issued using DLT. Last but not least, the Commission adopted a legislative proposal on the digital euro, which is expected to support the digitalization of the EU economy and spur innovation in the context of Europe's open strategic autonomy. Another priority was to create a European financial data space in the broader framework of the European strategy for data. We've been working on developing policy on 3 work strands that encompass public disclosures, supervisory data, and customer data in the financial sector. The Commission adopted the legislative package on the European Single Access Point, which is currently under implementation and will considerably facilitate digital access to public disclosures of firms in standardized and machine-readable formats. The Commission also adopted the strategy on supervisory data in EU financial services that modernizes EU supervisory reporting and puts in place a system that delivers accurate, consistent, and timely data for supervisory authorities at EU and national level, whilst at the same time minimizing the aggregate reporting burden for all parties concerned. We have also adopted a legislative proposal on financial data access to substantially broaden customer control over their financial data beyond payment accounts, which are already regulated in PSD2. It is expected to stimulate competition in the financial sector and to lead to more innovative financial products and services. FIDA would also promote digitalization of the EU financial sector, offering new business opportunities for both incumbents and startups. And finally, we wanted to address challenges and risks associated with the digital transformation. The centerpiece of our action here has been the proposal on digital operational resilience, our DORA proposal, to ensure that all financial firms have safeguards to mitigate cyber attacks and other risks to their digital resilience. In particular, critical third-party ICT providers will be subject to oversight to ensure that they do not pose undue operational risks for finance. DORA entered into force in January 2023, and the Commission is in the final stages of adopting the remaining standards for it to apply as of the 17th of January of next year, as foreseen. So you see that significant work has been done on all the priorities of the digital finance strategy. Now, our digital finance package that was adopted alongside the strategy also included a retail payments strategy for the EU, which laid out an ambitious plan for modernizing and digitalizing payments in the EU. Payment services have a key role to play among digital financial services and are at the cutting edge of innovation and instrumental to support the digital economy. Digital payment solutions enable individuals and companies to transact in shops and e-commerce, settling bills, repaying loans or mortgages, transferring money, paying salaries or pensions. The strategy provides a broad policy framework to reap the opportunities of digital finance. The implementation of this strategy involved two major legislative proposals. The 2022 proposal for an instant payment regulation, which entered into force in April this year. It's expected to have a transformative effect. New mandatory requirements for instant credit transfers in euro will become applicable over the course of next year. In 2023, we also proposed a revision of the Second Payment Services Directive, PSD2, including two legislative proposals, a regulation and a directive, which are still in negotiation by the co-legislators. The revision that we propose includes measures to combat and mitigate payment fraud, to improve consumer rights, to level the playing field between banks and non-banks, to improve the functioning of open banking, to improve the availability of cash, and to strengthen harmonization and enforcement. So, as we are now at the end of the Commission's mandate, it's a good moment to take stock, but as we all know, past performance is not a guarantee for future results, and that's maybe a good reason to also look forward and see what comes next. Obviously, we are currently still in a transition, as the new Commission has not taken office yet, although it becomes clearer now that we will have a new Commission by the 1st of December. So let me maybe start with what we have on our plate in terms of implementation, and there is quite a few things that are in the pipeline there, both on MiCA and DORA. We have to adopt the remaining technical standards. That process is ongoing, and the majority of the drafts that have been submitted by the ESAs, by ESMA and the EBA will be adopted shortly. According to MiCA, we are also required to present a report on the latest developments with respect to crypto assets, including an assessment of the necessity and feasibility of regulating decentralized finance activities, lending and borrowing of crypto assets, as well as non-fungible tokens. For DORA, it will be important to put the oversight framework in place and more broadly coordinate regulatory action between financial supervisors and the broader cyber incident coordination framework. In line with our DLT pilot regulation, we will have to present a report assessing the DLT pilot and propose its extension, modification, termination, or another option would be to make it permanent. Following the significant legislative activities associated with the retail payment strategy, substantial implementation and enforcement work can also be expected on this file. The deadlines for banks and other payment services providers to roll out the Euro instant payments will also fall into the early part of the new Commission's mandate, and here we must see that the deadlines are strictly respected. Universal instant payments in euro will transform the payments landscape in the EU for consumers and fintechs alike, and it is expected to trigger further innovation. Then there are important pending proposals on which negotiations still have to be concluded. That includes FIDA, that includes the review of the Payment Services Directive, so PSD3 and PSR, and the proposal establishing a legal framework for the digital euro. These proposals will have to be finalized and implemented. Obviously, the ultimate decision to issue the digital euro will remain with the European Central Bank. Implementation of the payment services package that is currently under negotiation will require significant enforcement activity and the adoption of a range of delegated regulations. Digital solutions will also be further explored to help reduce administrative burden associated with reporting requirements and maximizing the reuse of reported data. So looking ahead, digitalization will continue to reshape the financial sector also in the coming years. An increasingly digital European economy needs innovative digital financial solutions with strong European players in the lead. The EU has seen many successful fintechs driving financial innovation and financial integration, and we have also seen the traditional financial institutions embracing cloud, data, and artificial intelligence. The EU has been a global leader in providing a clear and predictable regulatory framework to allow for innovation and at the same time protecting consumers and financial stability. Going forward, the EU must work to maintain that lead and further develop it in areas like artificial intelligence and the emerging world of digital financial assets. It must also work harder to leverage digitalization in building the capital markets union and to ease the regulatory burden of firms. At the same time as geopolitical threats are increasing, ensuring resilience and open strategic autonomy for Europe's digital payment and market infrastructure becomes ever more important. Digital finance should and will therefore remain a key priority for the next Commission. The 4 strategic priorities of the 2020 Digital Finance Strategy continue to apply, addressing also new technological trends that are reshaping financial services. Beyond FIDA, further development of the financial data space will be considered, including additional efforts to make existing high-quality data pools more accessible, building on the data hub of our digital finance platform. This is particularly relevant in the context of artificial intelligence applications in finance. The financial data space should also be linked up with data spaces in other sectors of the economy, enabling the use of merged data sets from across different sectors. Artificial intelligence tools have the potential to fundamentally reshape the way financial services are provided and consumed. The growing use of AI in the financial sector can create significant opportunities for people and firms, for example, in terms of better services and products and a better understanding of risks and more efficient processes. However, those developments may also come with risks that warrant further attention beyond the mere framework of the AI Act that entered into force in August. Even though the AI Act will impose obligations on providers and users of AI systems to protect consumers when AI is used to assess people's credit risk or life and health insurance risks, the use of AI in the financial sector is likely to be significantly wider. For example, it might become necessary to complement regulatory frameworks with supervisory guidance, setting out expectations on how to address potential risks of using AI in finance. We have initiated policy reflections on AI with the support of our expert group on financial data space and have been rolling out this work stream internally to also in close contact with the newly established AI Office and the European supervisory authorities. From June to September, we ran a targeted consultation on the use of AI in finance. Access to data, which is essential to train AI models, was mentioned as the biggest general challenge for the development of AI tools in finance by respondents. This includes data quality issues, lack of automated interfaces, and privacy concerns, as well as standardization and data pooling complexities. The dominance of large technology companies and the fragmentation of data across different sources and countries also pose significant challenges for smaller financial services institutions. Data privacy is another obstacle, both for accessing data, but also because the required steps to respect data privacy are time and money consuming. Respondents indicated compliance with regulation and the transparency and explainability of the models as further major obstacles. Overall, almost half of all respondents saw a need for guidance, either in relation to the specific requirements of the AI Act or to the development of supervisory financial guidance for the use of AI by the financial sector. Digital finance value chains and the evolving ecosystem, including technology firms, will merit further attention. Financial firms are working in an ever more symbiotic relationship with technology firms, and we need to prepare for the eventuality that big tech firms or other mixed activity groups start providing financial services. We will therefore continue our policy work on ways to assess whether supervisors have the tools they need to oversee large groups that mix financial and non-financial activities. Last not least, developing digital asset markets in Europe can make a substantive contribution to building capital markets union and make it future-proof. Numerous financial institutions in Europe are driving innovation in this direction by issuing bonds, funds, or other securities in digital tokenized form. Building on the DLT pilot, further work would be needed to promote common standards and, where necessary, regulatory frameworks to promote such issuance so that Europe makes the most out of this global trend towards digital assets. As you know, we held a dedicated workshop on the topic in June, and we will continue both our in-house assessment and stakeholder outreach in this respect. And we are also about to launch a comparative legal analysis of the suitability of the member states' legislation in view of financial asset tokenization. So let me conclude by referring to some of the new top-down priorities of the new Commission as they are emerging. Some hints we can take from the political guidelines of our President-designate von der Leyen and the direction of travel that she has given to commissioners-designate. For example, the guidelines stress the need to exploit the untapped potential of data to support the development of artificial intelligence and other frontier technologies, and are calling for a European Data Union strategy. This strategy will draw on existing data rules to ensure a simplified, clear and coherent legal framework for businesses and administrations to share data seamlessly and at scale while respecting high privacy and security standards. The mission letter to Commissioner-designate Albuquerque calls for continued monitoring of new opportunities and risks arising from digital technologies, including an assessment of the deployment of artificial intelligence in the financial sector. It also calls for an implementation of an open access framework to financial data for companies with a clear implication for the financial data space. The letter also calls for continued work on improving digital finance and payments to support new technologies in the financial system, and that includes a robust retail payments infrastructure and further measures to remove barriers to the consolidation of stock exchanges and post-trading infrastructure. The mission letter to Commissioner-designate Dombrovskis calls for quick progress on the Digital Euro project, which was also taken up in the political guidelines. This is where our policy work on payments and the digital euro, as well as insights gathered as part of the DLT pilot regime, will be particularly useful. So, as you can see, these priorities build very much on the work accomplished in the past few years, which is a good basis for the work that lies ahead of us under the new Commission. So thank you very much for your attention.